Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money.
And welcome to the Investor Coaching Show. I am Evan Barnard, sitting in for the illustrious Paul Winkler today. He is cocooned somewhere in Arizona working on his next book. So hopefully he's getting some rest or doing a bunch of writing and not necessarily interrupting his day, listening to me scare all of the investors in the Middle Tennessee area. But want to have some good news today, okay? This is going to be ideally an uplifting couple of hours. We'll hit several topics. We'll talk about investing and so forth. It is the Investor Coaching Show. But I want to touch on, because this is the week of Veterans Day, and there's been several events, various parades, a lot of times church services, veterans being recognized, which is fantastic. We thank all of you for your service, as well as the family members that are left at home when your veteran departs. Obviously, most of you would know I was a Marine Corps infantry officer. One of my sons is a Navy submarine officer. One is an Air Force recruiter. I kept my daughter out of the service on purpose. I didn't want to do that to the military. But we do enjoy the benefits of living in a free country, and we don't want to lose sight of that. My wife and I had the chance to be down at the Schermerhorn yesterday, and the U.S. Naval Academy Glee Club, both the male and female choruses, put on just a phenomenal show with the Nashville Symphony. If they ever come back, I think this is the second time they've actually done a Veterans Day concert here in Nashville. And so if you ever happen to see them coming back in town for that, it is really worth doing. And then, of course, even though we had a volatile market, we hit 48,000 in the Dow. It's dropped back a little bit, the last couple of days. And the volatility will continue until Christ comes back or whenever the market ends, whichever comes first. But the real stress for me today was actually earlier this afternoon when A&M was trailing South Carolina by about 20 points in the third quarter. And all of a sudden, they ended up pulling it out and winning the game. So I can now relax and focus on educating y'all and giving you some guidelines on proper investing, as well as just general finance. And as you know, I like to dabble into philosophy. And as a firm, really, you will notice that we've had an increasing number of messages, whether it's our podcast, whether it's during the show, but we are wanting to serve as kind of an apologetics source for capitalism and for freedom. We really don't want to take that for granted. We all recognized or paid attention to Mamdani's election in New York, an avowed socialist and so forth. And so we're going to be talking about that in more detail over the next weeks and months, and maybe permanently. But for our listeners that are under 30, it may be some new information that you just never picked up in school. For our listeners that have children, teenagers, maybe even college-age children that seem to be winning the argument around the dinner table of socialism is better than capitalism, we want to provide some ammunition for those conversations and make sure that we maintain a free market in addition to the freedom that we enjoy here. So I want to start off with just some differences between capitalism and socialism and communism. It's not going to be a college course. Just hitting the high points. Any one of those economic systems could be an entire semester course, and obviously we're not going to take the time to do that. But, capitalism, you hear the term a lot, But if you've not studied it, you might not know exactly what we're meaning when we say capitalism. And chances are, if you asked a professor versus a business owner versus a politician, you might get 3 different answers of what capitalism was. But just simply defined, capitalism is an economic system in which private individuals and firms own the means of production. The markets determine prices, and I'll expand on that a little bit later on. And profit seeking drives economic activity. It emphasizes individual liberty, voluntary exchange, and limited government intervention. So let's break that down. Private individuals, that's you and me, and the companies that either we work for or own. We own the means of production. You might own the building, you might lease the building, but you own the desks, own the computers. Certainly if you're farming and you've invested, at this point, hundreds of thousands or millions of dollars in enormous equipment that you're using to produce from the farm, manufacturing, all the presses, stampers, all of those kind of things, you own those. The government doesn't own it, and you're just using it at the permission of the government. Now, what comes with ownership, and we'll touch on that line of profit seeking, drives economic activity. Well, why in the world would I invest $500,000 in a piece of equipment that wasn't going to somehow give me the ability to make at least $500,000 over some period of time to pay for that, and then an excess that leads to profit? And that, one of the inherent things in this profit seeking and in the private ownership is risk. And, you hear us talk a lot about risk and return, and, risk is normally in the portfolio context. We use risk as a measure of volatility, how far up and down a portfolio may go in a given time period, 1 year, 3 years, and so forth. But in this context from capitalism conversation, risk is, I don't know if my business idea is going to work. Am I going to be able to produce this product? And if I produce it, are enough people going to purchase it that it's going to become a profitable enterprise for me? And so when you have that increased amount of risk, a capitalist looks at that as, okay, that's what has to happen for me to have this increased reward. And so when you hear, have a contrast between capitalism and communism, a lot of times you hear just kind of a short phrase of capitalism is the unequal distribution of wealth and communism is the equal distribution of misery. And so by definition, you are going to have inequality where capitalism is the dominant economic system. If someone doesn't work, doesn't create, doesn't have a desire to, grow wealth, then they're not going to have as much or produce as much as someone that's working 100 hours a week, 50 hours a week, whatever it may be, coming up with ideas and creating wealth for themselves. That will ultimately lead to unequal outcomes. And, let's look at markets determine prices under capitalism. A lot of times, I think even last couple of weeks, Paul and I have talked about, the only people that believe in communism are, China, North Korea, and active managers. And so, short of being able to consistently predict the future, which no one seems to have developed that skill set yet, at least not over any long period of time that's reproducible, markets are going to figure out the best price, not just for a stock, but for any purchase that goes on in society. It is not random that, toothpaste costs $3 a tube or whatever it costs. That's not just a random thing. The market has figured out, okay, people will pay this much. They won't pay $12 and so forth. And competitors, in this case, will say, Publix, Walmart, Kroger, Whole Foods, whoever sells toothpaste, they may try to create differentiation between those products, and one's organic, one's whatever, clears the tartar off your teeth. But the bottom line is, even as consumers, the market is determining the pricing for things. If things get too high, we quit buying them. And so, profit seeking drives the activity, and it's a voluntary exchange, meaning I choose to go, into the Apple store and get a new iPhone, or I choose to go to the phone store and get a new Android phone. No one is forcing me to do that. Now, a lot of times, particularly younger folks, when I have conversations, it's like, well, you can't live without this particular item or that particular item. Well, that's fine, but you actually can live without it. Now, it may make your life much easier. Frankly, I would almost rather lose a car than not have the ability to have a phone, to be honest. It kind of drives a lot of what activity we do in life. But the bottom line is, it's not like food and water and clothing and shelter. They're wants. And we voluntarily exchange money for something that somebody has produced. And that ends up, kind of representing their value in society. And so capitalism, just kind of the core tenets, again, individual liberty, voluntary, limited government intervention. One of the early writers around capitalism, if you exclude biblical principles that tend to, address business in the scripture, not using dishonest measures and so forth. Adam Smith in The Wealth of Nations, written in 1776, was kind of the patron saint of writing about capitalism. F.A. Hayek, which is kind of the founder of the Austrian school, and Milton Friedman, just some great thinkers in that area. So capitalism is the predominant view, and yet when we hear people say, well, capitalism doesn't work, I had to pay X for gasoline. Okay, but at least you had gasoline. Somebody drilled that, somebody refined it, and you were able to get it in your car, to go to work or something like that. So, that's capitalism. And then we'll touch on socialism and then create some distinctions after the next break. But socialism is starting to have major industries, or the means of production should be owned or regulated by the community or the state. And so instead of you owning the gas station, instead of you owning that farm equipment, the government owns that farm equipment, and they let you use it, and you keep some of the food maybe that you produce. And socialism in today's conversations is a little bit of a continuum or a spectrum. You hear this term democratic socialism, and I think that's actually what Mamdani described himself as. I would dispute his use of the term, actually. But most of the time, when you hear this term democratic socialism, people are talking about, Scandinavia and those kind of things. But they are actually market-based economies. They are capitalist societies. They just have a very large social net. But, of course, one of the early writers around socialism and communism ultimately was Karl Marx and Friedrich Engels. And he didn't like capitalism. Why? Because there was unequal outcomes. And you hear this term of it's not fair. And so, you have democratic socialism, as I said, but then you have state socialism, where the state does own, manage key industries. They get involved in economic planning. And private property becomes less of a value in a socialist society. It doesn't mean you don't value it. It just means you don't have the access to private property. You might own your home, you might own your belongings, but you may not own the means of production and large-scale capital and things like that. And generally speaking, you have reduced personal liberties. And communism, finally, if we have, the examples easily of China and North Korea, where they have ultimate control. Now, you might say, well, there's capitalism going on in China. There may be profit motive and businesses and so forth, but as an economic system in the nation, it would still be considered a communist country. And the state owns, all of that stuff. State controls how much you're going to plant, what you're going to do, and so forth. Well, how does that work? Does communism work well where it's tried? Does socialism work well where it's tried? Short answer is no. You can't find an example of where a society adopted socialism and stuck with it and improved. Time and time again, you'll see Venezuela used to be a very prosperous nation, one of the most prosperous nations in South America. And then they went socialist and maybe communist, if you want to go that far. And all of a sudden, Chile is a much more prosperous country in South America because they're using capitalist principles. And that happens the world over. Korea is one of the best examples of the differences between the effects of capitalism, communism. The satellite pictures at night of South Korea, it's all lit up, just the entire nation. It's phenomenal. And you look above that, past the border, and North Korea is just dark. And so, we want to begin to make sure that we teach what is capitalism, what is socialism, and the outcomes of that. When we come back from the break, we'll talk about how effective these various things are. We won't spend the entire hour on this, but I think it's important. And again, we want to give you guys some ammunition, either for yourself, if you're struggling with capitalism versus socialism, or your kids or something like that. You are listening to the Investor Coaching Show on Super Talk 99.7. We'll be right back.
Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. Hey, what's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax.
I miss pointing at Paul when we come back from a break and air drumming. He can actually play. I just kind of bang the desk. But welcome back to the Investor Coaching Show. I'm Evan Barnard, filling in for Paul today. He's out working on his next book project. And we're talking, continuing the conversation on capitalism, socialism, communism, and just kind of looking at some of the effects of these various things. Because if you talk about it in the abstract, sharing everything, everyone getting along, it's kind of like Acts 2:42. The problem is, we live in a fallen world, and we'll touch on some of the outcomes of that. But our economy is about $27.7 trillion in terms of nominal GDP. China is about $18 trillion in nominal GDP. So it doesn't seem like there's this huge discrepancy between the two. But when you look at GDP per capita, what's the output of the country per person? The U.S. is 82,300 and China is 13,000. And you see that all over the world. In countries, like the U.S., GDP 82,000, Sweden 55,000. Free societies, relatively speaking, capitalist-based economies. And then you look at China, India, Vietnam, their GDP is 13,000, 2,500, and 4,300, respectively. And so when you turn off the incentive for profit, when you turn off the ability for people to create wealth for their families and to create a legacy, activity is just squelched. It's just a natural response to that. And so, that's really the joy of capitalism is innovation. Somebody that can maybe make some money or even just want to benefit society comes up with a great idea. So here's just a simple thing. Actually picked this up on Facebook, of all things. Was a post, and just a summary of things. There's lots of piling on mundane, but worth remembering why communism, socialism, government control, ownership is bad. And so it misunderstands human nature, which is absolutely the truth, and implies that people will be virtuous as long as they have enough money. Then, ironically, it assumes everyone with money is sinister. And so, as a capitalist, if you have some degree of wealth, which varies, the fact that you had, 3 cows in a society where someone only has one, they may view you as wealthy. But, somebody always has a bigger boat is the phrase that I use a lot. But if the people with money are sinister, and then they just say, well, people will be virtuous as long as they have enough money, those things just don't match. It doesn't work in the real world. Socialism takes from the capable and gives to the less capable, ensuring that resources won't ever be used productively. Great example of that is someone could give me some piece of, say, farming equipment and just say, here, start this and go, harvest crop, whatever. Well, I don't know what I'm doing. I wouldn't know how to run that piece of equipment. I didn't earn it. I didn't learn how to use it. Someone just gave it to me, and I go drive around in circles and probably ruin the thing. And so someone that knows how to use that item can get tremendous production out of that. And socialism takes from the capable and gives to the less capable. It destroys competition and consequently, destroys innovation. It destroys people's incentive to be productive by denying them the benefit of their labor. It always produces fewer, lower quality products. And, there's one of the first times when we moved down here from Ohio, actually, I remember going into the Whole Foods down in Cool Springs. And this was maybe a little bit later on that we'd been here, and looked down an aisle, and there was about 20 different kinds of bottled water on the shelves, just a whole aisle of different kinds of bottled water, all different price points and so forth. And, I just marvel when I see those kinds of things of that's the beauty of capitalism, is you have all this choice, and I can choose to buy an expensive bottle of Fiji or a little bottle of, just purified water. It's my choice, but I don't have empty shelves because the government forgot to do enough bottled water that month. And so, you want to avoid that. It also denies people the dignity of having what they earn and earning what they have. Oftentimes, when you hear these conversations, when I'm a party to a conversation with like Gen Xers or maybe Gen Zers, and I can't always keep those age brackets apart, but, when you hear a capitalist encourage someone to go work, or, hey, go get a job, or, don't just sit around, you need to go work. It isn't just for the fact that, you need to go make some money because you're going to starve to death. We understand the value that and the joy that someone gets from actually accomplishing something, not just being given something, but they have this passion and they pass the test. They, build the item, they make enough money because, now they're standing on their own 2 feet and so forth. And we want as many people to sense that joy as possible. And socialism basically assumes that it's unjust for one person to have more than another, when real justice means that the dishonest and the unskilled shouldn't have as much as the honest and the skilled. And so, capitalism, as I said, is the unequal distribution of wealth, but it drives innovation. It's the fact that we have smartphones. It's the fact that you can listen to this program, as Matt says, on YouTube, Facebook, Twitter, Twitch, and Rumble. That's all of that is coming from capitalism. That is not from the government creating all of those things and means of communication.
Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.